This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back. Happy Tuesday, May 6th. I cannot believe this is episode 441 of the podcast. Just wanted to, before I jump in, thank everyone for either following, which is like approaching 15,000 notes followers on Substack. For everyone that's a free subscriber, a paid subscriber, it's very, very humbling. So without further ado, let's go into Jawboning Again, episode 441. So I'm going to cover breadth in a second, but I just want to let you know that it was a rug pull type of day because we initially started to rally on whispers and rumors, whether it was Besant or whether it was Trump. I think Trump had stated that there will be some good news to share on Thursday, and markets spiked on that, but immediately after it got sold off. And then he also mentioned we don't have to sign deals, meaning you can still get progress without having a tariff deal done. In other news, Jensen Huang was at ServiceNow, their conference, and basically said if they are blocked from selling their chips to China, it would be a tremendous loss for the company. Newsflash, I don't think that the U.S. is going to continue to allow AI chip sales to China from U.S. companies, so he should get used to that. I suspect China will start developing their own as quickly as possible through other companies like Huawei or even Samsung. Let's see. On Substack Notes, I shared a story about California's housing market starting to flip. San Jose, and for those that don't know, that's the mecca for Silicon Valley. That's where all the companies like Facebook and all the others are headquartered. Their real estate market is showing some issues with spiking inventory and crashing net home sales. Lowest in 13 years. That video is in the show notes by Reventure Consulting. So let's jump into breadth. Looking at today's numbers, we had 178 new highs versus, 178 new highs versus 157 new lows, 35% advancing versus 62% declining, 51% below the 50, and 69% below the 200-day moving average. As I stated, we had every chance to go green right around sandwich time in New York, but got sold off. It tried to bounce in the last basically 15 minutes, sold off, and we closed near the lows of the session. All the Mag 7 were red. All of the pharma and healthcare were red, and I'll cover that in a second. The only green sectors today were utilities, up 1.1%, basic materials up basically 0.3%, and everything else was pretty much red. Healthcare was down almost 3% today. There was a headline that Trump is or has set a deadline for the next 2 weeks for pharma-specific tariffs. Now, I'll cover this in a bit, but let me just go through all the sectors. You had industrials down 0.78%, technology down 0.74%, real estate down 0.7%, consumer cyclical down 0.5%, financials down 0.46%, communication services down 0.4%. Now, with healthcare and pharma, biotech, and potentially the looming pharma-specific tariffs, I suspect that they're going to want all of the production to come home.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you, they connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.